Alibaba reported pretty stellar earnings, but the stock still declined subsequent to that earnings release. And so the question is, what exactly is causing the stock to decline? And spoiler alert, it's a result of the larger economy in China that has been declining. And so that's what we're going to investigate in this video, in this full analysis of Alibaba's Q1 results. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, the challenging thing in this environment right now is that you have two opposing forces. You have Alibaba, who's doing really well. Their results came out, and I'll show you that in a second. They actually outperformed pretty much everywhere where they needed to. The only area where they didn't outperform was cloud, but they also didn't underperform either. There was kind of just like baseline on cloud. So overall, it's okay, and revenue as a whole was double the growth rate that I expected it to be this year. However, in the greater economy, you're seeing things slow down. There's weaker economic data. You're having home builders shares start to decline. There's debt default issues, and there's other issues that are happening that people aren't even talking about right now. For example, the debt increases at the local level as a result of an over-reliance on land sales and not on a property tax, which a lot of people aren't even talking about right now. I feel like I'm the only YouTuber, well, I'm the only YouTuber that I've seen that has actually even mentioned it, but you guys let me know if there's other YouTubers that are covering that particular issue in more detail. And so let's dive into some of the economic items that we're seeing that are driving the Chinese security prices down. So you can see just from this headline here, this is from the South China Morning Post. This is actually a newspaper owned by Alibaba, just FYI, guys. But weak trade data, sliding home prices, and the depreciation of the currency is causing people to speculate more, or at least be more worried about the widening debt defaults in their property market and the shadow banking industry. And specifically, this is what they're worried about. It's the fact that the real estate crisis that we've been talking about on this channel for, I would say, at least 2 years now. In fact, there's a 4-part series on the real estate crisis that I built on this channel, which you can get access to. And you know what I'll do? I'll link it at the end of this video. It's a really good series, and I do believe that if you haven't seen it, but you are an investor in China, you absolutely have to see it. But you can see that that real estate crisis is starting to get more real. And so you can see Country Garden, which was China's biggest real estate developer, is now starting to or staring down default as it's facing billions of dollars in losses and 200 billion in unpaid bills. And so that 4-part series that I talk about speaks about some of this, where the builders cannot pay the companies that are helping them build these homes finish the projects. And so you're running into projects that sit incomplete, I would say, and you have buyers that have already purchased the apartments and are already paying the mortgages, and they don't have access to their unit. And so that's a big crisis of confidence. Why would somebody buy a home if they don't even know that it will be built? Because you're seeing all these people struggle with getting access to their properties because they're not completed. Evergrande has also filed for U.S. bankruptcy, and so this filing comes 2 years after the company defaulted on its debt. And so that also set off defaults by smaller Chinese developers. And so you're starting to see this turn into a larger issue. But on a larger scale, I just think overall investors are just tapping out. I think they've given up on their short-term outlook for Chinese stocks. Beijing has not followed up on its July 24th pledge with measures to lift up the economy. I was hoping that you would see vouchers, like spending vouchers or something that would give people a little bit more spending power that would help the local economy, but I didn't see that happen. And so it is what it is. You're starting to see sliding home prices now. In some cities you're not going to see this. Every time I say that there's home prices declining, people come in to the comments and say, look, it's not happening in my city. I get it, I absolutely do. I don't think it's happening in every city, but I do think the ones that are most susceptible for it are these smaller cities, tier 3 cities in China, where you're starting to see this creep into the economy. And so that has undermined the confidence and stoked default concerns, as we mentioned before. And I showed you that, Country Garden and Evergrande are struggling, but also note the private wealth manager has also run into some challenges. And so I'm going to pay more attention to this. I will make a video on this particular item because I don't have all the details just yet. And then, of course, the economic data is also weakening. Now, this is something that we've chatted about many times on this channel, that, and the point that I made is that if China is the warehouse or factory of the world, and the world is slowing down its consumption, then what happens to the factory? And you're starting to see that now. Industrial production rose 3.7% year over year in July, which is below the expectations of the 4.2% growth. So all the people who were saying, hey, you're a little bit too conservative on your Alibaba growth estimates for 2024, are you going to continue saying that, or do you now acknowledge that, hey, there might be risks in the Chinese economy even subsequent to reopening? This is what I was always worried about. There was tailwinds, but there were also headwinds, and so I took those both into consideration when I forecasted out Alibaba's 2024 growth in the single digits, not even the double digits that I still think a lot of people were doing. And so, maybe not a lot of people in this environment, because the company has struggled for so long, or at least the shares have. And so retail shares are up 2.5% compared with estimates of 4.3%. So here's really where that voucher system could really help. It's not like they haven't done it before, at least not that I'm aware of. I do believe that they have done this before in the past. You guys let me know in the comments if I'm wrong, but here's where this could really help if you want to surge demand locally. So all in all, over the last 5 trading days, you can see Alibaba's down 6.5%. And so, what does this all mean for Alibaba? The stock has really been struggling. Is now a time to say, hey, you know what, this was a mistake, it's been a couple of years, and it's time to walk away and deploy my capital somewhere else? Well, I won't make that decision for you, but the way I think about this is there's an operating company behind this security price. How is the operating company doing? And here's where it gets a little bit less clear, because behind the lagging stock is a company that just delivered a fantastic quarter. And so you can see the revenue breakdown. Their largest segment, and the segment that drives most of the free cash flow, Taobao and Tmall Group, had a fantastic quarter. I was forecasting a year-over-year growth of 7.5% for China commerce, and they're well ahead of that right now. Do they continue with this outperformance? I don't know. I'm not going to increase my China commerce forecast just because of the economic uncertainty that I'm still a little bit concerned about. However, it's really nice to see that in the first quarter they're already ahead of the game. Now, international just blew it out of the water. They're up 41% year over year. And so once again, fantastic quarter. And cloud, they continue to struggle to regain their momentum of growth. You were expecting, or I was expecting, China's cloud sector to grow at around 30% a year, especially in its infancy right now. But we're not seeing that growth from Alibaba. I do believe that they're focusing on the right things. However, I will point out one item that I would like to see them speak more about on their conference calls, to give some of us laymen's of the in the intelligent cloud, in sort of like the cloud business, a better understanding of the business. I don't think we're all super experts in AI. I think we all pretend like we are, but we're just faking it. I think what we really want to see is things that make sense to us. Like, for example, what progress are they making on cloudifying businesses that are not in the Internet of Things? That is something that they spoke about more than 2 years ago, and they haven't spoken about it in their earnings conference calls. At least they might have done it in other presentations. And if you guys do have other presentations where they speak in more detail about the cloud business and how they're growing it out, etc., let me know, or link it in the comments, and so I can take a look at it. You guys can see from here that the blowout was not just on the top line, but also on the bottom line figure here in the free cash flow section. And what it really does is it underscores the company's commitment to improving profitability as well as growing out revenues. You can see that free cash cash flow nearly doubled year over year on the quarter, which is fantastic to see, especially for us Alibaba shareholders who want to see more and more buybacks as time goes on. I think the company is sort of like delaying buybacks right now. They just want to focus on getting the separations out, getting the IPOs done, etc., and then deciding who gets what cash, etc. So I think that's why they're holding on to the cash. But I do believe that there is a potential for greater buybacks as the higher operating entity is able to shed off some of these businesses and become more flush in cash. And so we'll see how that plays out. But for many of you who are sort of upset that we didn't see the high level of buybacks in this environment, I think there's two reasons why that's happening. One, there's just economic uncertainty, and so you want to have access to cash in this environment. But two, of course, is what I just mentioned, that there's a little bit of uncertainty as a result of them wanting to split the company in what I would refer to as a pretty terrible environment to list these companies. And so we'll see how all of this plays out. Now, just diving quickly into the analysis of the segments. Now, I did a pretty thorough analysis in the first look, and so I won't spend as much time. But what I really wanted to speak about is, when you look at the revenue of the Taobao and Tmall segment overall, revenue is up 12%, which is very good. However, when you dig into a little bit more, you see that the direct sales and other segment is the one that was up significantly, up 21%. So what actually happened there? And I think what this is really showing is that here's where you can see that there was somewhat pent-up customer demand, and so you can see somewhat of the impacts of a reopening. And it was very interesting that they called out that there were strong sales driven by the consumer electronics category. That to me sounds like there was an increase in discretionary spending, and so that speaks to a strong economy. Under all of these negative headlines, you're seeing evidence that the economy is strong and resilient. And so what I would say is that don't discount the Chinese consumer. Just like how when you will see articles about the US weakening, I would say don't discount the American consumer as well. I think these consumers are strong and they can push through these economic uncertainties, and we're kind of seeing that both in the US and in China right now. And then on their international segment, overall, I think just when this business splits, this is one that I'm going to be holding on to. I'm going to be holding on to the China commerce business, the international business, and the cloud business. And so, overall, this business did fantastic. And it's really that international commerce retail that outperformed. It's up 60% year over year. And the increase was driven by all of the sub-segments or all of the companies in the international business. So you have Lazada in Southeast Asia, you have AliExpress globally, and then you have Trendyol, which is in Turkey, and of course Duraz in Pakistan. And so you saw that they're saying it right here, all major retail platforms did well. But the other thing is, it wasn't just top line growth. One of the worries about the international business a couple of years ago was profitability. Are they growing at the expense of profitability? And so they're telling you that they've been improving monetization. So you can see AliExpress during the quarter, AliExpress Choice continued to upgrade their consumer experience with price competitive and improved service. This is their like Amazon Prime type of offering. And then of course AliExpress significantly improved user retention and purchase frequency, and so you want to see that. Now going into Southeast Asia, Lazada recorded double-digit revenue growth year over year, but also the unit economics continue to improve compared to the same period last year, and this is fantastic. And what it really speaks to is that, yes, they're in a highly competitive environment. They're competing against Sea Limited. And so they're not only able to grow the top line, but they're also growing the bottom line in face of such tough competition. And it really speaks to how well this company is operating. I almost wrote off the international segment when I initially did. I don't know if it was like a 7-part or a 9-part or a 10-part series on Alibaba. I said that it was likely that Lazada would probably lose in Southeast Asia to Sea Limited, but it doesn't look like that's happening at all. And I think the Sea Limited brand is Shopee. You guys correct me if I'm wrong, but I believe it's Shopee. I just thought that Lazada would not be able to beat Shopee. Now, they might not be beating Shopee, but they're doing fantastic. And so if it's those two that end up succeeding in Southeast Asia and we end up doing well as Alibaba shareholders, that's fine with me. That's why I'm going to continue to hold on to this segment, even if they spin it off in an IPO or whatever they're planning on doing with it. And finally, with cloud, the revenue is only up 4% year over year. I like that they're getting more profitable, so that's really nice. The profitability did double, but the challenge I have here is that I like that they're focusing on AI. Everybody's kind of focusing on AI, and I think part of it is that they want this to increase their valuation. I think that's why they're speaking mostly about AI, because that's kind of what's happening in the US. Everyone that talks about AI gets a nice uplift in their share price. But what I'd really like for them to do is highlight how they're cloudifying local businesses in the non-internet segments. And really what that speaks to is telling us sort of like, people that are not experts in the cloud business, things that relate and allow us to understand the business. Because when I think about the generational opportunity in cloud, what I'm thinking about is making business faster and cheaper and easier to run by having everything on the cloud. Now, look, my whole YouTube platform, everything runs on the cloud, right? I host all my videos on YouTube, which is a cloud-based service for me. Obviously, it's free for me. The model that I'll show you guys later, Patreon, the way that I communicate to like everything, even like our monthly calls, it's done on Zoom. Everything, and those calls are housed on Zoom as well, right? So everything is done on the cloud. It makes everything so much easier for me to run, and so I'm an example of a digital cloud-based type business, and I would like to see Alibaba speak to how they would help regular businesses, not even just like myself, but like regular operating business, manufacturing businesses, use cloud-based services, and how their offering would resonate to the average company, and why is there a pull for them to partner with Alibaba Cloud, and what are they doing on that front? How are they acquiring these names, et cetera, like lots of more detail on that front, which I don't think that they've been doing for the last couple of years now. I might be missing it. And so once again, if you guys have access to anything, let me know in the comments below. Now, speaking of the model, I know you guys always like seeing the model. Now, I did cut off the note at the top here. All I said was note that I've not adjusted the model for the updated segmentation, as the business is splitting up anyways. And I'm not sure what the post split will look like. And so really what's happening is, you're seeing their segments look the way that the company was previously reporting them. They have resegmented these, so when you go into their financials, you'll see that it's just different now. They'll, for example, they don't use the word China Commerce anymore. They call it the Taobao Tmall Group, etc. However, you'll see everything does tie. So like the 868, 687 still ties, and then of course, when you forecast out, you're still forecasting out the total revenue, so it's fine. I just don't want to rebuild this and then have to rebuild it again when as they start splitting out the company. So I'll just continue to forecast it this way. But overall, you can see for their total China commerce business, I'm not forecasting, at the 12%, like the double digit range, which is what they actually came in at for Q1. I still believe that there's a lot of risk here for the back half of this year. And so I'm forecasting out at 7.5%. And, a high level, the way I'm thinking about this is overall, the Chinese economy is expected to grow at around 4 or 5%. They probably won't hit that 4 or 5% this year unless they stimulate the economy. So they might do 3 to 4, but I still think Alibaba can do a little bit better than the overall Chinese economy. So I give them a couple percentage points greater than the Chinese economy. That's all I'm doing there. With international, they blew it out of the water, but I want to see another quarter. And so here's where I could really bring up my growth expectations. International commerce wholesale underperformed. International commerce retail significantly outperformed. And so we'll see how this plays out. But overall, I probably should bring down international commerce retail. And I think what I'll do is after this call in 2029, I'll probably just bring it down a little bit, because 12.5 going out 10 years seems a little bit high. I mean, overall, I don't think it makes any impact to the valuation materially, but I'm going to bring that down anyways now that I look at it live when I'm recording this for you guys. Local consumer services, I don't really, I think it's fine at 7.5%. It did outperform. And then, just going into cloud, I would say that we're probably going to see another couple of years of 5%, then it might tick up to 10, and then it might just settle at 7.5%. I really want to see back to the mid double digits, or at least give us a plan on how they're going to get there. They just haven't done that. And so confidence in this business segment is down, but I would still hold it because I believe that here's where you can have some serious outperformance relative to my model. So what does this mean overall? You can see that, overall, it doesn't really matter where I forecast the other segments. It's really where I'm forecasting China commerce, because the revenue amount of it is so big relative to the rest of the organization. Wherever I forecast China commerce, that's generally where the direction that total revenues is going to go. So you can see that I'm forecasting around 7.5%, and total revenues expected to grow at around 7.5%. And so, somewhere in that 7 to 8% is where I think Alibaba can comfortably grow out for the next 10 years. And so we'll see how this plays out. But you can see that how the economic environment is impacting my valuation is I'm remaining conservative. There are risks on the horizon. We're starting to see some of these risks materialize. This is why I've always stressed being conservative in your valuation. And hey, you know what? If you lose out on the opportunity as a result of being too conservative in your valuation, that's totally fine. I'm more than happy to give up that particular opportunity and look for other things. Now, that's not the case in this situation, and it hasn't been the case in a long time. Even when we use conservative estimates, the company still seems relatively cheap. And this is what I mean. Using a 15 times terminal multiple, which is not high for a company like Alibaba, I value them at around $173 per share. You add in their excess cash, you're coming at around $200 a share. And this is not a price target for you guys to go and rely on and buy the stock. Do your own due diligence. You guys let me know what you think that the company's valued at. This is just my opinion. Do not use this to go and buy the stock. Like, that's not the point of this channel. I'm not looking to create followers on buying and selling stocks, because I don't even disclose my portfolio for that reason. And so the current share price as a percentage of the valuation is only 42%. But really, this is one element. The other element that I like for people to focus on is the current 1 year out multiple, which is 11.1 times free cash flow. But really what it is if you just reverse that 1 divided by 11.1, it gives you 9%. And what that is it's a 9% equity yield of free cash flow that is net of stock-based compensation. And the reason why I say that it's net of stock-based compensation is because this company does issue a lot of stock to its management, and so that actually draws down some of the capital that's available to owners. And so when I forecast Alibaba, I give them a charge for that. I expect them to use some of our capital to pay their management. And so what this does is it just creates a model where you can actually comfortably forecast the cash that we're going to get, of course, net of this noise. And so when you look at this, I did write that note that this isn't the best on the list in the tracker. What I'm really trying to say is that I tend to look at the undervaluation and the free cash flow yield net of stock-based compensation together. If I'm seeing like a 15% and it's trading at less than 50% of its intrinsic value, I'm very excited. 9% is not bad. Don't get me wrong. That's near the top of the list of cheap securities or undervalued securities, but it can be better. So that's the point that I want to make. And that's why I'm keeping an eye on their share price. If this thing comes back into the 70s, maybe even the high 60s, I might end up continuing to purchase more of Alibaba, but we'll see how that plays out. And just quickly, guys, if you want access to that model and all the other models that the Patreons get access to, you can actually get access to it at this lower tier right here. And if you want to join us for live monthly calls, there's special live courses, and there's a comp schedule which I used to invest in the regional banking space, and it just provides you with a lot of information on regional banks. You can get access to that there as well, and that's all on the higher tier. And I'm going to continue to essentially throw alligators into the water of the moat of what this is, because I think that this is the best value on YouTube, and in every month it becomes a greater and greater value because there's another live call that you can get access to. There's more live courses, and I'm going to be building out more comps. I'll be building out insurance industry comps as well. Then we'll go into retail, etc. And so there's more and more stuff going in here. The other thing is I'm always researching more companies. I'm always updating models. And so there's more and more stuff coming in here as well. And so I do believe that this is the best value on YouTube. And so I highly encourage you guys to join us. And so that's it for the Q1 review for Alibaba. Now, the one thing that I did mention is that if you have not seen that 4-part series on the property sector and its issues in China, you can get access to that whole series right here.